Hello guys, welcome back to the Lumley trading video. In this one we are going to be doing some in-depth stock analysis over on Ocean Biomedical, ticker OCEA. Now it is one of the leading gappers today, being up about 40% as of right now. Opened up around that $5. We're now currently sitting around $6.25. So what are those key statistical levels that I'd be paying to from a technical standpoint from here? So this is a stock, at least in recent times, we have been seeing a lot of volatility. It keeps popping up on these scanners. So if we push to the upside, I'm looking at around a 775 or 775 resistance. So again, this is probably a potential for today. If we can push to the upside, we need that bit more momentum. Around a 780, I would start looking for a pullback. Again, if there's shares available to short, potentially looking to play that short bias. If there isn't, then it's more looking to play trend. And how would I look to play trend? It would be waiting for a break above this 780. Come back to test it as a support, and if it can hold that as a support, then it's looking to play trend to that next deviation, which in this case would be 920. If we break that, I'm looking at $10, then $11, $12.25, $12.80, and the final final level is basically around $14.50. So these are all those upper resistances. Now on a stock like this, it is very volatile. We've seen it especially over here, which looks like Feb 23rd. It absolutely squeezed, broke out of all of these levels. Now, how do we account for this in the future? So this is why, firstly, you always want stops in place because you don't want to be holding it through short on there. There is no option, so it does limit how we can trade this. But what it really does mean, if we're breaking up to these upper deviations, you know, the $12 or above, really it's just trying to play that as a pullback. If it's one of these parabolic moves, you know, you're going to have to stop out. You don't want to be down 100% on a move. And then potentially re-enter that short as we start to crash, because again with these they do happen quite quickly. I mean, within basically 8 hours it went from $5.80 up to $26.50 and then all the way back down to $10. So they are volatile. There is money to be made, but again with these, if there's no options to be able to define your risk, you really need to be being risk managed on these stocks, because you can easily blow an account if you are not managed. But those are those key resistances anyway. From a support side, I mean, we do have some around 375, 330, and if we want extreme lows, we'll be looking at around $2 and 110. Now, not a stock I'd really look to buy to the downside. I think it's one of these where if you're a momentum trader, you try and catch that momentum, or again, if you like to short overbought small caps, then again, this stock is kind of that opportunity. If it's coming into these supports, really it's more of a gamble. Yes, we may get that potential bounce, but it's kind of, you're buying at these lows in anticipation of another big move. So, you know, if you're buying down at those low threes, or if you can wait for the break down to the twos, you know, there is potential. If we squeeze, you know, there'll be hundreds of percent to be made, as we've seen in the past. But it's you do want to be buying off essentially a gamble, because that's all that is. So, I mean, those are the supports I'd be paying attention to if you're paying attention to supports, but really that's not something I'm paying attention at all to myself. Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out this analysis video.